Imagine a future where we understand stablecoins are just a cash derivative. And we take those stablecoins in and lend them back out and make loans with them the same way we do deposits. Now, a lot would have to change from a regulatory standpoint and accounting standpoint. And these things would have to be considered deposit-like instruments. But there is a world where that could eventually happen. And that would make stablecoins very useful for capital formation, the same way that deposits are today.
Welcome in, everybody. You're listening to Wrestling Payments.
Anyone that's ever tried a stablecoin transaction will know that it is not frictionless. It's not an easy thing to do. It's easy to make mistakes. You can send it to a wrong address, which is almost like imagine an email, but a lot more complex. You can send it on the wrong blockchain. You can use the wrong stablecoin. That complexity can be a real hindrance to consumer adoption. Now, we know that all technology over time gets easier to use, right? The early days of the internet were pretty complex, and now it runs in the background. So that's going to change. From a financial institution standpoint, the complications are where you could have failures would be probably around custody and security and stablecoin usage or tokenized deposit usage and where that's going. And is it with a sanctioned individual or illicit activity? Those are the kind of things you worry about from a financial institution standpoint. The other thing to worry about would just be the complexity from the technology stack. You talk about applications, orchestrators and infrastructure providers. You've got liquidity providers out there. You've got the issuers themselves. You've got various blockchains. So it's fairly complex, and there aren't a lot of one-stop shops where you can go to get that type of solution. So it's a matter of, if you're a financial institution, you have to understand how are your users or members using this today? Are they using this today? How are they going to use it tomorrow? What's the volumes look like? What's the impact to our financial institutions? What's the strategic importance of doing this over time? And then consider those use cases and how you, from a strategic standpoint, you're going to build this out so that, it works with the existing monetary system and the existing banking system today.